Oh man, welcome back to another cryptocurrency video. We've got Bitcoin now above $29,000 at a very key level. We've just had the banking crisis worsen. Pacific West, the latest proposed victim of the struggling interest rate environment. We had 25 basis points yesterday, remember. If you haven't watched that video, go catch up yesterday on the implications of that. But in this video, we got to look at the key levels. Where could Bitcoin be heading? We'll also do a Pepe update because a lot of you guys have been asking me, and it is absolutely exploding here today, up 50%. So we're going to get into that as well. Let's kick off with the main story of the day, and that is Pacific West. Yes, the shares tumble 35% as bank says it's considering all options. Now, we know this is the latest, right? You had Silicon Valley Bank, you had Signature, you then had you now got Pacific West, you had First Republic previously as well. And trust me, guys, when I say I do not think this is the last one. The longer Jerome Powell holds interest rates at the current rate, which is now 5% to 5.25%, more and more regional banks will suffer. If you didn't watch my video yesterday, I broke down exactly the problem because a lot of people are not understanding what's going on. Interest rates being high lead to the face value of bonds that banks hold going down. Yields are inversely correlated to price, okay? So their theoretical value, yes, is high if they get all their coupons from the bond, but the face value of the bond, which they have to keep on the balance sheet, is low. So if you get a bank run on these regional banks, like we saw with Silicon Valley Bank, you end up in a pickle where you cannot pay the deposits. And this is something that is really interesting because crypto has learned this. Right? We've had crazy bank runs in crypto. We've had runs on stablecoins. We've had runs on various different things like Terra Luna, right? We've got the scars to prove it. Now, the existing traditional finance system isn't as sophisticated as us. Let's face it. They've never had the social media age of a bank run. And that is why Silicon Valley Bank and the banks that are collapsing are some of the biggest collapses we've ever had in the US banking system. And people are starting to realize that crypto is the answer. Imagine waking up with one day and all your money was in Pacific West and you're only insured in the US up to $250,000 on your FDIC insurance. Insane to think people could have millions of dollars in there, their life savings, and there's no guarantee they're going to get it. You can't keep cash under your pillow. You can't keep millions of dollars of cash under your pillow, but you can keep a Bitcoin seed phrase in your head. You can have instantaneous, immutable, decentralized money. And that's what people was realizing. And that is why Bitcoin started to move up last night after the FOMC. Well, if you go back into the charts, what we could see is that after the FOMC meeting, well, during the FOMC meeting, as we're live streaming, the Bitcoin price was kind of moving down. Not crazy, but it was downward trending. And then boom, it started exploding thereafter. We got to the important support line 29. It's consolidating above that now. Then we need to zoom out and say, okay, on the 4-hourly chart, where are we? We're just above this green line. Very important level of support. Right? Very important that we turn it into support and use it to mount an attack at 30. Because if you look at 30 here in the recent candlesticks, we got rejected twice. Once, boom, twice, boom. We need to hold above here, get some support, okay? In other words, do not be surprised to see it go, come back down, boom, collect some support, and boom, break straight through 30, okay? And thereafter, it's very important that we get above 31, which is the peak from where we got rejected. That will then give us the higher high we're looking for. For those who don't understand what a higher high is, if they don't understand the basic structures of technical analysis, ijaz.uk/TA. Guys, it's a free TA course. Take advantage of it. Still so many of you guys watching this that have not taken advantage of it. Or if you have, you've watched like one lecture and not taken the time to work through it all. What are you waiting for? You've got to take responsibility. There's only so much other people can do. If you believe in Bitcoin, if you believe in crypto, if you want to trade, if you want to invest, put in the effort. It's a couple of hours. Like other people charging tens of thousands of dollars for these courses. Right, it's free. Go use it. 10 years of traditional finance experience. Okay, so then we come back to here and say, this is really important. It's really important, that we're able to get above this peak here at 31. So let's hold 29, build some support. 30 is going to be a key level, and then 31. A lot of work to do, but it's possible. And one thing we know is when the banking crisis worsens, crypto seems to benefit. It seems to invert and go inversely correlated, which is why we're seeing Bitcoin slightly up today, despite pre-market in the US having some jitters. Right? NASDAQ futures slightly down, S&P futures slightly down, and the Dow Jones as well. But crypto slightly positive today. Okay, so inversely starts decoupling because the crypto narrative is anti the traditional finance banking narrative. Okay, so it's a really interesting situation that we've got going on. If we take a look at Fear and Greed index is sitting here at 64. Markets are still quite frothy. You got to remember, it wasn't long ago that we were sitting at 15,000 and then 19,900. And now to be sitting back above 29, markets are quite frothy. So you've got to be careful. You've got to understand that the markets are in quite a buoyant mood. And that is why it's important not to chase those green candles. Wait for those pullbacks, wait for the smart levels, and that's where you want to be accumulating. When you have positive days like this, why you shouldn't need to be accumulating. You should be accumulating on these red days. When the markets are fearful, that is when you want to be topping up. And when markets are frothy and greedy, that is when you want to be saying, hang on a second, what is going on here? Now, similarly in that vein, you want to look at something like Pepe, which a lot of you guys have been asking me about. And you can see there's a huge breakout. It's up another 50% today here. And we were monitoring this 4-hourly downward trend, right? It's moving in a downward trend, nice move to the upside, break. And again, your target from this was to be at the top of the wedge, and it's gone beyond this. If you were to take the measured move, and again, there's only so much TA you can do with meme coins. It's not necessarily about the TA, but it does give you some structure from which you can start trading with, and you can see you hit the price target exactly. If I just line that at the point of breakout, you see you've gone here and hit your price target. Okay, so technical analysis does work, but you've got to use it with a pinch of salt on a meme coin, on a social coin, which is driven on social hype. But again, if you want to trade this, only trade what you're willing to lose, guys. Don't go overboard on these things, please. It's not worth it, right? What it is worth doing is put a little bit of lunch money in. That way you're not wasting your bandwidth. Go buy your Veg, Bitcoin, Ethereum, whatever other projects you like, and focus on your portfolio. And you know you got a little bit in here. So anytime you get that FOMO, you know you invested a little bit anyway. Nothing that's going to go crazy. Nothing that you're going to miss if you lost it. And it's a social coin. But again, if you're doing so, you buy from positions of support. I was shouting, screaming in fact, saying, do not buy at the peak here. Wait for the retracement to the EMA ribbon. Sure as hell, you get the retracement to the EMA ribbon. Yesterday on the live stream, we said, guys, this is where you want to be buying at the EMA ribbon. And then boom, nice return you would have had if you bought from the EMA ribbon here. In fact, let's see if we can take that measured move to see if you were buying yesterday in the live stream and then you took that measured move to the top side, 112% in a matter of hours, less than a day. Right? And that's the skill you want to learn. Don't let people say, oh, don't trade meme coin, don't trade social coin. You can trade whatever you want. You're grown up. You can do what you want. But do so with smart risk management. Stack the cards in your favor. Learn the fundamental skills of TA. Learn the fundamental skills of FOMO and managing your psychology, waiting for pullbacks, buying from positions of strength. And that way you'll be able to navigate this market. Okay, so coming back into Bitcoin, let's take a look here. Just to wrap things up in terms of where do we want to be heading. Important level here on the 4-hourly chart. You can see the 4-hourly EMA ribbon has not been held in a nice trend for a little while, okay? So we've not fully confirmed this in a bullish momentum. We did flip it here and we were above it and then we lost it again, well, then we got it back again. So we need to see a nice move past 31. Otherwise, we're not going to reclaim this 4-hourly EMA ribbon. And then we look at the daily. And the daily EMA ribbon is where the battle is. And this is where you can clearly see that we are forming, let me show you on the other chart, a very important triangle pattern. And it's this green triangle that we need to be focused on right now. We've got the EMA ribbon acting as support in our favor, which is fantastic. That's helped us move from the bottom of the green triangle to the top. But now there could be some resistance coming in. And so what we want to look for in order to get to the next price target, not only do we need to break with volume and maybe get a retest, but we need to see that move up beyond. We need to get past that 31 like I showed you on the other chart, and then we can work to our price target, which sits in the vicinity of 32,600. That's what we're looking for. We've got to see good volume come in, we've got to see the break, and then we can take that trade. I would not be taking this trade early, and I certainly would not be doing it now. I want to wait for clean volume beyond, confirmation, and then I'd start building my position. I'd wait for a retest on the back end, and then I'd add the rest of my position, and then you drive that long, okay? But important battle at 30, important battle at 31. If we clear those, then it's hugely bullish on this daily chart. Because if you look at this daily chart then, we would have created higher lows, we would have created higher highs, and we would have kept our uptrend despite the best effort of the bears. And then when you zoom up to the weekly, you then finally see that things really start to look very, very interesting. Let me just put that back on the weekly there. You then find out that things start to look very interesting. Let's see if I can pop away some of these drawings so you don't have to look at all of these drawings here. Let's hide those. And perfect. And we can see here, we own our EMA ribbon, right? We are above our EMA ribbon, a retracement into the EMA ribbon, even up to 26,000. And we're still strong here on the weekly chart. And that's the positive here. Okay, we're in a really good situation here. We're holding our EMA ribbon. A couple of weeks ago, we had a really bad bearish engulfing candle, but we've come back strong in the following week. And this week, we've got to continue the same. We need to hold this week green, get above 31. That is the mission. If we don't get above 31, then you can still call for 26 at the EMA ribbon. Okay, that's the key battle that's going on right now. We'll keep an eye on the banking developments. We'll keep an eye on what's going on in the traditional markets, because remember, if the banking crisis worsens in the US traditional markets, that could provide fuel for Bitcoin. One extra note I did want to cover off on the Pepe for those that are trading or invested in it. You've got to keep an eye that the funding rates are hugely negative, which means there are a lot of bearish short positions in the market right now, which could set you up for a crazy short squeeze. So again, be careful, make sure you invest what you're willing to lose, and I'll leave you with this frog. Thanks for watching, guys. Smash up likes. Don't forget to subscribe. I'll see you in the next one.